Shopify Inc. Shop is a publicly traded company in the US equity market. The current price is $126.48, up 2.15% from the previous close. The intraday high is 128.11 and the low is 125.16. The latest open was 126.1 and volume is around 3.5 million shares. Shopify is a leading global commerce infrastructure provider supporting over 2 million active merchants. In Q1 2025, Shopify reported revenue of approximately $2.36 billion, up 27% year over year. Gross merchandise volume hit $74.8 billion, up 23%. Free cash flow came in at $363 million with a 15% margin, marking 7 straight quarters of double-digit free cash flow. Operating income was $203 million, more than doubling year over year, and adjusted net income hit $226 million. Shopify's platform includes subscription-based storefronts, embedded payments via Shopify Payments, marketing tools, logistics, financing, and increasingly, AI features like Shopify Magic and Sidekick. Shopify Payments penetration hit 64% of GMV, equivalent to $47.5 billion in payment volume. This boosts both monetization and platform profitability compared to third-party processors. AI plays a central role in Shopify's strategic expansion. Shopify Magic helps automate descriptions, emails, and customer service, while Sidekick provides conversational assistance to merchants. These tools are gaining widespread adoption, particularly among small and mid-sized businesses, helping streamline operations and improve conversion rates. To support international growth, Shopify rolled out tools like Tariff Guide and Managed Markets to help merchants handle global compliance, tariffs, and cross-border sales. These initiatives expand Shopify's addressable market, which grew from $46 billion in 2015 to over $849 billion by 2023. Shopify also acquired Vantage Discovery, a company founded by former Pinterest engineers to strengthen AI search and personalized discovery. CEO Tobias Lütke and President Harley Finkelstein are focused on unifying global commerce by integrating design, payments, marketing, and fulfillment. Shopify has made several AI-related acquisitions over the last few years, improving its competitive position in a space where companies like Google are also pushing AI commerce tools. For Q2 2025, Shopify reaffirmed guidance for mid-20s revenue growth, high-teens gross profit growth, and continued free cash flow margins in the mid-teens. Operating expenses are expected to remain around 39 to 40% of revenue. Shopify trades at a premium valuation. The price-to-earnings ratio is near 87, and the price-to-sales ratio is around 15. While these multiples are above sector averages, they reflect strong growth expectations, high-margin embedded payments, and AI-led innovation. Analysts are divided. Some firms like Wedbush rate the stock a strong buy, with price targets between 120 and 135, while others, such as Arete, have downgraded to neutral due to valuation concerns and competitive risks from players like Google. Discounted cash flow models with conservative assumptions suggest an intrinsic value between 80 and 110 per share. Peer and multiples-based models point closer to the 100 to 115 range. This suggests that at current levels between 126 and 127, Shopify may be slightly overvalued in the short term. From a technical perspective, Shopify stock recently moved above its 50-day moving average and is forming a potential double bottom pattern. Resistance lies near the 125 to 130 range, with support at 110 to 115. A breakout above 125 could attract momentum traders, particularly if new AI tools like Sidekick drive merchant engagement and retention. Shopify's fulfillment network continues to be a work in progress after selling most of its logistics business to Flexport in mid-2023. The company is now taking a leaner approach to fulfillment, partnering with best-in-class providers instead of managing warehouse infrastructure itself. This asset-light strategy reduces capital intensity while still offering merchants tools to manage shipping and delivery performance, improving scalability without burdening the balance sheet. Management's capital allocation strategy has been conservative. Shopify maintains a strong cash position of over $4.9 billion, giving it flexibility to pursue strategic investments, acquisitions, and innovation without relying on debt markets. Long-term debt remains under $1 billion and interest expenses are minimal. The company has not declared or paid dividends, instead focusing on reinvestment for future growth and product expansion. Shopify's partner ecosystem is another source of strength. Thousands of third-party apps, agencies, and developers build on Shopify's API infrastructure, helping merchants customize and extend their online stores. Shopify takes a percentage cut from app revenue and third-party themes, adding to its high-margin revenue base. This ecosystem effect creates switching costs and helps increase merchant retention over time. A key risk for Shopify remains macroeconomic pressure on small businesses. As Shopify's core customer base includes entrepreneurs and SMBs, prolonged inflation, rising rates, or slowing discretionary consumer spending could affect merchant churn and revenue growth. While larger brands like Mattel and Red Bull use Shopify Plus, the platform is still heavily weighted towards smaller merchants. Management's ability to retain and upgrade this user base amid economic headwinds will be a major performance lever in 2025 and beyond.